Hey guys, it's that Dividend guy coming at you with another Motley Fool list. So today we're looking at stocks for a little bit cheaper. We're going for about $400. So three fantastic dividend stocks to buy right now with say a $400 limit. So let's take a look at the first stock, Innovative Industrial Properties. So IIPR ranks as the most expensive of the three dividend stocks on the list with a share price of a little over $190. But I think you'll like what your money buys. The company is organized as a real estate investment trust, which means that it has to pay out 90% of its taxable income to shareholders in the form of dividends. And its payout has quadrupled over the last 3 years, and its dividend yield stands at around 2.9%. While the dividend is great, that's not why this stock is so widely covered. It's a unique kind of REIT in that it focuses on the sizzling hot medical cannabis industry. Its share price has more than quadrupled over the last 3 years. I expect its great momentum and it will keep continuing as the company buys more properties and leases them to cannabis operators. Currently, it only owns 72 properties in 18 states, and that's only the tip of the iceberg for this fast growing REIT. So, guys, if you are looking to get into the cannabis industry, maybe with Aurora, maybe with Tilray, um, maybe with Kronos, there's a lot of people that are looking to get into the marijuana industry. But the reason that I personally haven't yet is because I don't know how to pick a winner in this space. That's the problem. I don't know enough about the medical marijuana industry to pick which one I think is going to be the best performer. And with this type of investment, just like with Altria, who's in Kronos, I have 150 shares of Altria because I wanted to be inside of that growth industry, but I didn't want to do it in a single um, in a single company. So I have exposure to Kronos through Altria, but it's not going to be as big of a downfall if it doesn't work out for Kronos. So that's how I decided to play this. But owning a REIT that operates in that industry is a phenomenal way to get exposure to this high growth industry. And this way you're getting dividends on top of that growth potential because usually cannabis stocks do not pay a dividend. The ETF that I looked into, MJ, that owns a lot of the big players in this, does pay a small dividend, but it's nothing compared to this REIT. So this is a phenomenal pick. Definitely worth the $190 because we don't know how big it's going to be once it gets legalized in more states, but I guarantee you that growing it is going to be phenomenally profitable, especially in the medical marijuana sector. So next, we're looking at AbbVie, and this is one that I personally have a huge stake in. I have 60 shares, and the stock's been up like crazy. So let's take a look. It first began paying dividends in 1924. The big drug maker has paid a dividend every quarter since then as part of Abbott and as a standalone entity in 2013. It's only a dividend hike away from joining the elite group known as the Dividend Kings. One of the which the qualifications are to raise the dividend for at least 49 consecutive years. So some people argue that it's only been like 7 or 8 years since AbbVie spun off from Abbott, but a lot of people consider AbbVie still a part of it, as in they include Abbott's dividend raises with this company. I do, because like if the assets were under Abbott when they were getting those dividend increases and getting that historical dividend, um, that status, I think AbbVie deserves it as well. But you can currently buy a share for AbbVie for less than $115, and for that amount, you'll get one of the juiciest dividends around. Its dividend yield stands at 4.6%, and you'll also pick up a big pharma stock with pretty good growth prospects. It's important to know that Humira is facing biosimilar competition beginning in 2023, and the company expects a decline in sales for a drug that it weighs on heavily. In the first year, Humira loses exclusivity. However, the dividend shouldn't be jeopardized at all. Even better, the company expects to quickly return to growth. Its product lineup includes several other drugs with solid momentum, including blood cancer drugs, as well as heirs to apparent Humira. So, AbbVie's my obvious favorite out of these because I own it. I bought it like $72 a share, and it's like they said about 115. So I'm about $2,500 on this holding alone. It is the single best performing stock that I've ever bought, and I love the company. Um, the dividends are great, and I wish it would drop to about $80 a share so I could buy more. So this is definitely going to be my favorite in this article because it's my favorite pharma stock. So next we have Eastern Government Properties, and I've actually never heard of this. So it's an innovative industrial properties, offers tremendous growth with its dividend. Um, AbbVie has an impressive track record. If you're looking for a rock solid safety, though, you're probably going to really like DEA. And with the share price of around $21, you'll be able to scoop up several shares with the remaining cash of your 400 after buying one share of IIP and AbbVie stock. Eastern Government Properties owns and leases out government properties, so it's a REIT just like IIP, and it's organized the same way. But the main tenant is none other than Uncle Sam. As of March 31st, 2021, the company owned 82 properties, with all but 2 of them leased to the U.S. federal government agencies. Its dividend currently yields 4.8%. The company is also has solid growth prospects. The REIT even recently raised its full-year earnings guidance because of its increased opportunities to acquire new properties. Wow, so you're pretty much investing in the government with this, and that's never going to fail. So we have a cannabis REIT, we have a very profitable drug manufacturer, and we have a company that owns and leases buildings to the government, Uncle Sam. So guys, with $400, maybe you can only transfer, maybe 400 or 500. These could be great stocks to look into. The marijuana REIT obviously has some great growth prospects. AbbVie will have a hiccup in the next few years, but it's got a great track record of growing dividends since the spinoff, and I confidently own it. And then, you can't really get any better than leasing out rent to Uncle Sam. So Uncle Sam will be paying you rent if you own these the REIT, this REIT, DEA. So you either get the booming marijuana industry with a crazy growing dividend, a great drug manufacturer with a growing dividend, or your rent gets paid to you by the government. So these are 3 phenomenal companies. So let me know if you guys own any of these stocks down in the comments below. If you do, let me know how many shares you own and why you guys own them. I think these are all solid prospects. They all have great growth opportunities ahead of them, plus growing dividends. So you can't really get mad about that. They are the perfect blend of growth and dividend growth, as in the company has great growth prospects on its own, and that will fuel more dividend growth, and that's exactly what I look for as an investor. So my favorite out of these is AbbVie, followed by the innovative industrial properties, and then the government REIT. So thank you guys so much for watching. Remember to hit the subscribe button on my channel, that dividend guy, and when you do, hit the bell notification so you don't miss any updates on my content. Thank you guys so much for watching, and I'll see you guys in the next list video. Take care.